Welcome back to the Brent Bruce Daily. Today is August the 5th, 2022. It is 3:26 Central Time, and a lot is happening today. We are seeing a lot of activity basically because of this payroll report that we were waiting for. We talked about even on Monday that we were hoping that it was going to come in, and we say hoping from the perspective of interest rates that it would come in low, that new jobs would be a lower number, under maybe around 250,000. It came in at 528,000, more than double my expectation, my personal expectation, just based on what I'm seeing in the market. Now, I do believe that these numbers, they're just delayed. I don't know that these are what I think really reflects today's employment numbers, but these are the numbers that came out, and these are the numbers that Wall Street is seeing and investors are seeing. So many things are happening, especially in the home loan interest rate world. A couple of other things that, if you look at this article, that jump out was that the unemployment rate was at 3.5%, but they estimated 3.6%. So that means that the numbers came in better, that the economy in general is better than the expectations, which means that normally the stock market, the Dow Jones, the S&P will improve, and the bond market will actually go down, will get worse because of money moving from the bond market into the stock market. However, there's some other things that are kind of going against us. So right here, you see wage growth also surged and jumped 0.5% for the month. Okay, so what that's saying is that wages grew. Well, wages going up is inflationary. Inflation is the enemy of bonds, which is what our mortgages are based on. That was a bad thing as well. So what that means is that they're still seeing, based on these reports, inflation in the economy. So what's going to happen? Well, just what I would think. What's the Federal Reserve going to do with these numbers? Well, the very next bullet point here, their traders are now pricing in more of a likelihood of 0.75% increase on the federal funds rate the next time that the Federal Reserve meets, which is in September. They're not meeting in August. Okay, so in September, raising the federal funds rate by another 0.75%. Now, again, that's moving further away from my expectations that I've been talking about on this show, which I expected September to be an increase of 0.5, as well as probably the end of October would be another increase of 0.5, and then they would settle down. But I've also been saying the warnings. My concern is that the Federal Reserve goes too far and raises the federal funds rate too much and too quickly, and really pushes us into a bad recession. Now, I believe we're in a recession now. We'll see if that is actually something that is said out loud by the powers that actually determine and declare recession. And there's an article that I was reading earlier today that was talking about that. Let me see if I still had that one up here. Looks like I don't. But okay, so that's a couple of things that are affecting us, is that inflation is still looking to be kind of hot. Okay, so what is that doing to our home loan interest rates? If we take a look over here, we talked about that we were at about a 4.99% yesterday after some moves. Let's take another look at the chart here first. So yesterday we were experiencing a little bit of a rebound from our Tuesday here, when we were talking about the market really didn't like the fact that Nancy Pelosi had traveled to Taiwan. That was the only concern that really was put out there that made any sense, other than bouncing off of this ceiling of resistance. We had a big day, a big drop here, fought up a little bit here on Wednesday, fought up on Thursday. Here comes the jobs number, not what we wanted. So we were sitting here at this 100-day moving average, and man, we really took it on the chin today, dropping all the way down to, once again, that you're seeing a triple layer of support. So the negative news to the bond market was not enough to break through these floors, which is a good thing, because this should act as a bounce. Okay. Also keep in mind that over the days of watching the Brent Bruce Daily, I've talked many times about knee-jerk reactions. So people will move very quickly to the headline news, and then things start to settle down. So unless we get some other type of market moving news, my expectation is that we're going to move back up here, test this Fibonacci level at 101.219, and hopefully get back up into the range that we were talking about before. But the market has to digest this better than expected employment number. So we're going to take a look at that. The other thing that I want to point out here is that this coming week on Wednesday, we're going to get the new consumer price index number, the CPI, which is another gauge of inflation. And we need to be aware of something here. Where was this? Here we go. So here's the CPI article that I was reading from the Bureau of Labor Statistics. So this is legit here. And I was reading on the fact that last month, this is the July 13 numbers, we ended up at 9.1 was our headline number on CPI. The bond market did not like seeing that. That is very inflationary. Okay. Now, this is a 12-month rolling average. You see this over the 12 months. So we can look back into history at the 12 months and we can see what number is being replaced. Okay. So I'm getting a little bit deeper into this. So if you're looking at a 12-month average, and August last year was, so let's go down and look at August of last year was very low. Only 0.3 was the number in August of last year. Now we're going to replace that number with whatever the number is for August of 2022 and then do a 12-month average. So if we had August being a very low inflationary month, and look at all these other months have been higher. So this is basically tied for the lowest monthly report as far as consumer price index in a year. All right. So basically what that says is unless the inflation number, the CPI on Wednesday comes in at 0.3 or less, we're going to see this number, which is the headline 12-month rolling average CPI, that is a huge indicator of inflation, go from 9.1 higher. We could see it go to 9.4, 9.5. So then all of a sudden the markets are yelling and screaming that inflation is high because once again, we haven't allowed for the adjustments that the Federal Reserve has already made to saturate and start to report. This is a year out. Okay. So if we end up seeing that the numbers as far as the CPI show higher rates of inflation, that also higher rate of inflation and then also strong employment numbers is going to really give the Federal Reserve the room that they need to raise the federal funds rate by 0.75% or even more instead of the 0.5% that I was hoping we would see. Next thing you know, it's what we talked about, that maybe are they going to move too far in raising the federal funds rate? They had a target number of 3.5%. So we're going to see if they go further than that, which it looks like, I mean, based on the reports that are coming out, unfortunately, what I'm concerned about moving too far might be exactly what's kind of playing out here. You can always look these kind of things up here. I mean, if you're a nerd like myself and you like to read information about statistics and what's going on, this was something I just pulled up here. It's the Bureau of Labor Statistics. So a lot of detail here, but let's see what that is actually doing to our home loan interest rates. We talked about that we bounced and we were up in this range. We are down 75 basis points today. And if you watch this show much, you know that is a bad thing. So let's take a look at where we are. We were at 4.99% yesterday on our Brent Bruce Daily scenario, which is our very well qualified conventional home loan. And where are we today? We're at 5.125. Now, about a week ago, we were talking about 4.625, if you recall that. So we have seen a big movement. That is 0.5% in interest rate increase really in about a week, which is a big move. However, I do want to point out that having a 70 or now 77 point drop today and only seeing our home loan interest rate go from 4.99 to 5.125 is a blessing. This bank, United Wholesale, has been very strong. They've been pricing out very, very well for us. We're using them quite often because they're being so aggressive on their pricing. But this also makes me wonder if they are feeling the way that I'm feeling about the knee-jerk reaction, that they're thinking that they're going to see a rebound bouncing off of that floor that we bounced off of earlier today, and that we're going to see this rebound follow through and get us back up into this range here again. Hopefully, that is what they're seeing, and that is what is going to happen. Let's open this up and see what a little bit of points will do for us. I mean, if you want to pay $180, you're back to 4.99. I mean, that's a whole different story, isn't it? Having a 75 basis point hit and basically being at the same place. I mean, I think didn't yesterday we had maybe an $1,800 credit, and now we're at a cost of $180. So about a $2,000 swing in cost to get that 4.99. So I know we've gone long today, but there is a lot of information and a lot of effect that this jobs report had today, and we needed to get into that more thoroughly. And, here we go. Let's see what's going to happen here next week with CPI. I can't see it coming in low. I think that our CPI number is going to come in strong, and we're going to see inflationary reports. And unfortunately, that is usually bad for home loan interest rates. I really hope that we can get up here into this range here, because if we have a bad report, maybe we drop down into here again and we stay in this range between these two Fibonacci levels with maybe there's a third Fibonacci in the middle, and we can stay in these acceptable rates instead of down here at 5.5, 5.625 on that Brent Bruce daily report. Let me know if you have any other questions or what your thoughts are. I'm always interested. Again, make sure you like, subscribe, and share. Get on the YouTube page. Let me know what you have going on. Have a great weekend. We'll talk to you again soon.